I do think Sol will, double or triple the performance that ETH does. And that's driven by the usage and then Firedancer. Last time around, ETH was all about NFTs. I don't care. Usage is usage. Early stage usage. What these meme coins are is an early stage testing ground that NFTs were last time for a technology, stress testing it, and figuring out what is the true product market fit. My guess is what we're doing here is starting the social token thing that I've talked about for some time. Now, will we get there this time around? No, like NFTs last time around, we didn't fully get there. But what we're seeing is the start of something, which is community tokens and the ways of participating in cultural communities and benefiting if you help the community itself.
Real Vision founder and CEO and global macro investor Raoul Pal is more bullish on Solana. He predicts that his native token could rise up to 47 times from its last cycle lows, reaching between $750 and $1,000 per coin. He is also bullish on Ethereum and explains that it will easily break new all-time highs before the bull market ends in 2025. Solana will double or triple the performance of ETH and depends on usage and then Firedancer. Although NFTs have fueled Ethereum's last major surge, he believes their use is essential, whatever form it takes. These early uses, like meme coins now or NFTs before, serve as a testing ground for new technologies. There is also speculation that we may start to see a rise in social tokens. He expects some market fluctuations in the short term, but he believes the Solana Ethereum chart will rise later in the year. He expects Solana to double or triple Ethereum's performance, thanks to increased usage and the development of Firedancer. According to Raoul Pal, Solana can outperform Ethereum and other coins in this bull cycle. If you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on the liquidity cycle and Ethereum.
So I think it's a very big thing that's happening. Like the first round of NFTs, 99.9% of it will go to zero, but you can have some fun doing it in the meantime. So I certainly don't judge it. People are very aware of the risks that they're taking in it. And I think it's just showing, if we step back, it's just showing that Solana can handle these kind of transactions at the right cost, at the right speed. And it also shows that culture can be tokenized in a way that works for the internet culture. High value things end up being NFTs. It just works better for that. But it also, NFTs will end up being for tickets and all sorts of other things. This is just the start of the technology. Memes is a different thing. It's fungible versus non-fungible. There's different use cases in the end, but culture always starts the movement, right? It started NFTs, it started meme coins. It's all the same cultural movement. My guess is 90% of the people who are in meme coins now were in NFTs last time around. It's the same thing.
People are very aware of the risks they run. High-value items end up being NFTs. It works better for that, but NFTs will eventually also be used for tickets and all kinds of other things. This is just the beginning of the technology. Memes are something else. It is fungible or non-fungible. Ultimately, there are different use cases, but culture always gets the ball rolling. Started NFTs, started meme coins. It's still the same culture movement. 90% of the people who now use meme coins were now using NFTs last time, is the same. As reported by Savvy Finance, Paul explained that what is happening is just speculation, whether cultural memes will become big, so long as everyone knows it's like betting on raindrops on a window. Paul also sees it as a way to test what could happen. There is still value in these things. Dogecoin has proven itself, just like Shiba Inu. These two or three will persist, and this meme will continue to create additional value. Although we don't know what will ultimately create value, Paul revealed that his two biggest trades with equal weight are WIF and Bonk, and he's been investing in them for a while now. He still holds Dogecoin because he believes Elon Musk will probably do something with Doge eventually. Apart from these, she does not have any additional investment. She focuses on comparing charts to each other, such as Bonk versus other meme coins. He admits to having difficulty with the direction of the bonk and WIF chart, which is why he avoids very early investments. He doesn't have time to delve into pump and dump projects to figure out what might move, thinking about what creates value in the channel. It is the number of active users, so memes tend to have a lot of active users and no apps. So what's happening is somewhere a chosen meme, be it WIF or bonk, well, bonk is a good example. Then there is retail use, and then there are applications. As a builder, you are incentivized to do this because there is care here. Then it does it automatically. I do not think that it's necessary. This is not a necessity. It's a natural result of attracting attention if people trust your network.
Many financial products over the years as ETFs haven't given the stock borrow fees or the dividends, and then they get forced into it by a free market where a competitor comes in and offers it. So I think it's fairly common that you see this kind of thing. Wall Street itself will actually deal with ETH itself. The RAAs and stuff,
got it.
Right now, nobody cares about a 5% yield if you're an RAA, if the number go up 100% in the year, right? So it doesn't really matter, but competition will force it, and they'll force the regulators to allow it. They're just not going to do it yet.
Ethereum spot ETFs will operate much like their Bitcoin-based predecessors, generating $4 billion in inflows within 5 months of their launch. Currently, all eyes are on the SEC's decision regarding the approval of Ethereum S1 ETF spot registrations, which could serve as a catalyst for a broader market recovery. According to a recent report, Ethereum could suffer a supply shock with nearly 1.26 million Ethereum potentially withdrawn from exchanges within 5 months of the ETF's launch. This change could significantly increase the price of Ether, which could lead to a new all-time high. By contrast, institutional funds currently control 3.3% of the circulating Ethereum supply. Using this as a benchmark, post-launch Ethereum ETFs worth between 3.1 and 4.8 billion are expected to flow. This represents between 750,000 and 1 million Ethereum, or between 0.65 and 0.85% of the circulating supply of ETH. Currently, Ether open interest OI on the CME exchange represents 23% of the size of Bitcoin futures contracts. However, since ETH futures began trading on CME in 2021, they have taken a 35% share of Bitcoin futures, indicating that there is a strong institutional demand for ETH. Shortly after the spot approval of the Bitcoin ETF, the price of Bitcoin surged 60% to all-time highs. According to research, if Ethereum ETFs go live, Ethereum will begin to outperform Bitcoin after almost 2 years of underperformance. More importantly, in its research report, it noted that removing the staking feature from ETFs would not negatively impact capital inflows into the investment product. Over the years, many financial products such as ETFs generated no stock borrowing fees or dividends and were then forced to do so by a free market where a competitor steps in and offers them. Wall Street itself will take over ETH, RAA, and everything else. Right now, no one cares about a 5% return if you are an RAA if the number grows 100% over the course of the year. So it doesn't really matter. But competition will impose it and force regulators to authorize it. They just won't do it yet.